So there will definitely be an increase in defense spending. It's just a question of how much and to how much of an extent. If the Ukraine ceasefire does not happen, and the key point to watch would be Trump is going to address at the State of the Union this week. He may potentially announce a result there, he may not, but if he announces a result that potentially they may push through, then perhaps slightly less spending. But on the end, I don't think the markets have fully priced in how much spend that needs to happen. So it is definitely on the cards, and it's something that actually would also help European fiscal. European economic growth would actually likely benefit from an increase in this, as well as sentiment on European stocks.
How would that help European fiscal, given the fact that European fiscal position is challenged in every single country, apart from maybe one or two, including Germany as well? How does the fiscal position improve?
So it's going to improve on multiple fronts. So European, we look at it from whether it affects European equities, for example, defense stocks, and how it potentially goes up. If you do have some form of a European ceasefire, for example, in Ukraine, you would have geopolitical risk premium potentially coming off.
Right.
Inflation potentially lighter, your yields would potentially come lower. Borrowing will become slightly cheaper on that. Right. That helps the fiscal impulse. Allows Germany maybe to push their fiscal cap on that end, and perhaps helps makes borrowing a little easier.
Even with defence in Ukraine, Europe finally, it appears, over the last few years, to be fair, it's been a process, taking its own defence even more seriously as well. Someone has to pay for reconstruction in Ukraine as well. Someone has to pay for reconstruction in Europe of our infrastructure, of our digital infrastructure as well, building up our own security in many, many ways as well. Again, all of those things are pressure on the fiscal budget, aren't they?
Yes, it is. You can raise fiscal caps, that's one.
Right.
You can make fiscal borrowing a little cheaper, controlling at the back end. The third is the European Stability Mechanism. They can potentially deploy that. That could also potentially help. So there are three avenues to help.
And I've spoken to various bosses of the ESM over the years as well. And the criticism I've given to them over the years is it comes with a stigma. When you go to the ESM, you go to these lending facilities, you have to take on all kinds of public commitments, almost on the naughty step, so to speak, as well. If the ESM doesn't get reformed, is it going to get used?
It is one avenue that you can potentially explore. If you really need to support, then I think it would be one avenue that you potentially put.
All right, let me move on from Europe, because one thing that's really encouraging in our earlier headlines is the manufacturing data out of China. We're all looking to see as and when we get a meaningful recovery, and it's got to come from the consumer as well. These amazing savings rate, and yet they are spending money, it appears, on EVs. And so when the manufacturing data and the EV data give me hope that actually China's finding a floor.
Well, actually, I think China isn't at the floor, it's actually at the cups of actually doing pretty well on that end. You look at China across multiple lenses, the macro lens, the monetary lens, the fiscal lens, as well as the equity stock market fundamentals. Monetary, they will be extremely supportive. We actually do expect them to do more triple R cuts, interest rate cuts. Fiscal, I think they have held their cards pretty close to their chest. For example, they have the 2 sessions here. They're going to wait probably up until the official announcement of tariffs before determining how much to actually utilize and announce on that end. And then on earnings, as you may have heard, there's been a huge shift from investing in tech in the US to maybe investing in tech in China because of the surge of
I may have heard something about some company called DeepSeek and what have you, and then President Xi talking to the tech leaders as well. So
that's right.
That last point is really interesting, because there was a time when there was a Xi crackdown on many, many sectors as well, education, technology, to name just but 2 as well. And people thought, wow, that makes China uninvestable. Did they misread what actually was going on from the Chinese Communist Party and the leadership?
I would say China is investable. It is definitely not uninvestable. They've actually been open, but you have to invest in line with what the policy initiatives are.
Right.
So right now the policy initiative is to actually focus on tech and develop tech and AI. It actually is a game changer. You divest out of maybe the US tech into China tech on that end. China has also decided to plow about 500 B in CNY into AI. So we do see earnings revisions coming in the near term, and we expect that to be a multi-year change.